Sometimes the biggest stories in tech, they don't start with a bang. They start with the smallest of numbers, a tiny little shift in the market that, if you look close enough, pulls back the curtain on a much, much bigger drama. And today, that's exactly what we're doing. We're looking at one small stock dip that reveals a huge truth about the AI boom. So yeah, let's pull back that curtain.
Okay, so what's the number? -2%. That's it. On December 3rd, 2025, shares of Microsoft, a company at the absolute epicenter of the entire AI revolution, suddenly slid by over 2%. Now look, for a company worth trillions of dollars, a dip like that, that's not just a tremor, that's a real shake.
And the thing is, it wasn't some big global economic event or a massive product failure that you'd expect. So what on earth could be powerful enough to rattle a giant like that? Well, the answer wasn't in the stock market. It was hiding in a single, very detailed news report.
Right, so the spark that lit this fire was a story from the tech publication The Information. They published this deep dive investigation, and it basically alleged that there was a crack, a pretty big one, in Microsoft's seemingly perfect AI growth story.
So here was the bombshell claim. The report said that behind all the triumphant headlines, Microsoft had to quietly lower its super ambitious growth targets for a key AI product. And why? Well, according to their sources, it's because the salespeople on the ground, the ones actually selling this stuff, were just not hitting their numbers.
And we're not talking about some minor piece of software here. The product right at the heart of this whole thing is called Azure Foundry. It's this major platform designed for huge companies, the enterprise clients, to build and manage their own powerful AI agents.
So let's just quickly define what we mean by AI agents. Think of them as AI assistants, but on steroids. This is software that's designed to just go and do stuff on its own, carrying out a whole series of actions for a company, whether that's managing logistics or handling really complex customer service issues. Honestly, this is the next frontier for AI.
And you can bet Microsoft was betting big on it. According to this report, the sales growth target they set for Foundry was a jaw-dropping 50%. That's a huge number, and it signals just massive confidence from the top.
But then came the data point from the report that really set off alarms. Get this. It cited sources saying that in one of the major U.S. sales units for Azure, less than a fifth, that's less than 20%, of the salespeople actually managed to hit that 50% growth target. Oof.
And it looks like this wasn't just a one-off thing. The report went on to detail another sales unit where the initial goal was even crazier. They were told to double Foundry sales. When, surprise, surprise, most of the team couldn't hit that, the quota was reportedly slashed all the way down to 50%.
So what you've got here are two totally conflicting narratives. On one hand, you have a really detailed report from a respected publication that alleges the reality of AI sales on the ground just doesn't match the public hype. And on the other hand, you have a flat-out denial from the company itself.
All right, so let's dig into Microsoft's side of the story. As you can imagine, they weren't going to stay quiet on this. They came out with a very specific, very direct response.
So Microsoft's main defense was basically this. They said the news outlet was mixing up two totally different things: the overall growth targets for the entire business and the specific quotas assigned to individual salespeople. It's a subtle difference for sure, but a really critical one for their argument. And they didn't mince words. They put out a direct statement. A spokesperson said, and I'm quoting here, "Aggregate sales quotas for AI products have not been lowered as we informed them prior to publication." So a clear, no wiggle room denial.
Which, of course, leaves us with the big question. Who's right? Who do you believe? But you know what? Maybe that's not even the most important question here. The real mystery isn't about who won this one little news cycle. It's about why this one story, on this one day, actually matters so much for the future of AI.
Because when you zoom out, when you take a step back, this whole thing stops being just about Microsoft's stock price. It becomes a perfect window into a universal challenge facing the entire industry right now, the real AI adoption challenge.
This race to build and sell these big-ticket AI tools for businesses, it is an all-out sprint. It's not just Microsoft. You've got OpenAI, Google, Anthropic, Salesforce, Amazon. Literally every single tech titan is pouring billions of dollars into creating these AI agents.
But here's the uncomfortable truth that this whole story really hints at. The actual adoption of these incredibly powerful, super complex tools by traditional, everyday businesses, well, it's been a lot slower and a lot bumpier than all the marketing hype would have you believe. And
The Information's report actually gave a perfect real-world example of this struggle. They pointed to the experience of this huge private equity firm, the Carlyle Group. Apparently, Carlyle tried to bring in these new AI tools, but they immediately ran into a fundamental problem. The AI agents just couldn't reliably connect with their existing data.
And what's the business consequence of that? It's simple and direct. When the technology didn't work the way it was supposed to, Carlyle did what any company would do. They just spent less money on it. This is the reality check that's happening in boardrooms all over the world right now.
So what's the real takeaway from all of this? What does it all mean? Well, I think we're seeing that classic moment in any tech cycle. It's the moment where the hype finally slams into reality.
Look, this isn't a story about AI failing. Not at all. It's a story about something much more real. The incredibly difficult, totally unglamorous, but absolutely essential work of turning a world-changing technology into a boringly reliable business product that just works every single time.
For the last couple of years, we've been living through this incredible period of just pure excitement for AI, a time of seemingly limitless potential. But a story like this suggests we might be shifting into a new phase, one that's a lot less about hype and a lot more about hard work. Which leaves us with one final question to think about. Is this the end of the AI honeymoon?